you can see money growth in the purple was negative for quite a long period of time. It moved into positive territory last year. We're still at a very low level by historical standards, roughly 3.5%. You can see inflation in the green line. It broadly, there is a correlation with money growth. Now, the big controversy right now is, are we stuck at this 2.5–3% range? We do not believe that we are stuck there, and that the big surprise will be much lower than expected inflation, thanks to productivity gains, thanks to the dollar going up, and thanks to monetary policy that has been quite restrictive. And I think Chairman Powell still describes monetary policy as restrictive.
Bitcoin ZELA stands out because it is clear and easy to use. We've made an experience that anyone can enjoy, no matter how much you know about crypto or how new you are to it. Now guess who is watching us? The author of the best-selling book, Rich Dad Poor Dad is so sad. Robert Kiyosaki, and I want to thank everyone who trusted us. We read every message, and the best part is that it's free. If you subscribe now, you'll get all of our new content for free. Don't just follow the trends, stay ahead of them. Get Bitcoin Zella today and watch this movie to enjoy the new edge. Cathie Wood looks at the federal budget deficit, or surplus, as a share of nominal GDP and asks, have we just barely avoided a recession? Let's meet up with her to find out more.
Inflation typically follows money with a lag. And we do think that we will see more gains against inflation. And we're still saying we would not be surprised to see some negative numbers out there. How could we get those if money growth is turning around like this? Well, we would get that if the velocity of money slows down. And it has been slowing down. And I think the uncertainty associated with the transition to a new administration could be one reason for velocity to slow down, taking any expansionary power away from this money supply growth. So stay tuned on that one. And then finally, we'll land on this very important metric, Bitcoin, the Bitcoin price relative to gold, the gold price. You can see it broke out at the end of last year. It's testing now. We have seen the gold price go up recently, and the Bitcoin price, while it broke through 100 to, I think we got to 108,000, it's come in a bit, and makes sense that it'll be testing a breakout. As you know, we believe that the Bitcoin price has miles to go for all kinds of reasons that we will delineate in our Big Ideas report. Our Big Ideas report will be out in a few weeks, and in that report you'll see how we get to our Bitcoin price forecast. We are in print, the bull case being 1.5 million. And while we have changed the way in which we get there, we do believe we're going to get there, especially given this administration's sponsorship of Bitcoin. It may even end up as part of Treasury's reserves. So if we're right also that the gold price is unlikely to move out of control in the inflationary environment, meaning disinflationary environment that we see, then Bitcoin will be responding more to its role as a technology and a new asset class than to its role, like gold, as a store of value. And it should continue to pull away from gold in the years ahead. This chart, usually I show you really from 2008 forward, where the correlation between this metals to gold ratio, which is in the purple, has been very high when you map one against the other on that scale. That correlation has been very high until recently. We're taking this back to give you more perspective and to show you rarely has the metals price relative to the gold price been lower than it is now. This goes back into the 80s. And this is the period of disinflation. And typically, you see that when that line is coming down, interest rates are coming down as well. If you follow this carefully, the correlation is pretty good, and that has not happened this time. In fact, interest rates have moved in the other direction. And I think there is a lot of fear about inflation, although if you look at the breakdown of long-term interest rates, and you look at the explanation of, is it real growth, is it inflation, is it just the term structure, the longer duration? It's explained mostly by longer duration recently. But if this gauge of economic health, metals to gold, does not improve, then interest rates, we believe, will come down. Now, this brings us to the shocking chart.
Analysts at Coinbase think that Bitcoin will have a rough ride ahead and that it won't be able to go up much. According to David Dong and David Han, the two currencies will do well in the short to medium run. May face headwinds because the Federal Reserve is cutting interest rates slowly and there is more sell pressure in the Bitcoin market. The analysts pointed out that the broader macroeconomic environment is still uncertain because strong employment data and persistent inflation make it less likely that rates will be lowered further. Recent reports on the U.S. economy added to these worries, suggesting that the Fed is not likely to lower interest rates further than the current range of 4.25 to 4.5% this coming month. Meeting this situation has lowered interest in risky assets like Bitcoin, which has made the market more cautious. A big increase in BTC supply could also slow the price's rise. According to Coinbase's report, the amount of Bitcoin that has been moved on the chain in the last 3 months has increased from 2.7 million BTC to 4.6 million BTC. This rise in supply, along with the 90 billion BTC that has been sold by long-term holders, has created a key resistance zone around the $100,000 mark. Market analysts think that these supply-side factors could keep Bitcoin's price in a consolidation range for the next few months, similar to what happened when the price was at its highest point in March 2024. For now, Bitcoin's recovery seems to have stopped, with prices stuck between $90,000 and $100,000. Traders and investors are waiting for clear signs of market direction, and don't forget to subscribe to Bitcoin. These dynamics point to a time of grinding consolidation. Kala, you'll get the most important news every day for free. I don't know why you haven't subscribed yet. If you like the video, click like and subscribe for more daily updates. Remember that knowledge is power, and we're here to help you on your financial journey. Until next time, happy investing.